Good morning. These are the things that matter most for the U.S. pre-market. Nvidia is turning from an earnings event into a financing test for the whole AI build-out. Wall Street is watching whether debt-funded data centers are becoming too big to fail. A renewed debasement trade is lifting gold, Bitcoin, and hard asset hedges, and consumer signals are splitting between weak footwear demand and resilient premium travel. The central market question is simple. Is this still a clean AI growth tape? Or is the market beginning to price who pays for the infrastructure behind it? Start with the AI financing question. MarketWatch described the debt-fueled AI build-out as already potentially too big to fail, while Yahoo Finance framed Nvidia's next growth test around Rubin, AI financing scrutiny, and the countdown to earnings. CNBC also reported SEC subpoenas to Wall Street banks around the near collapse of an AI hedge fund. That combination matters because the market is no longer only asking whether demand exists. It is asking whether the capital stack, leverage, and funding channels behind AI can hold up if growth expectations wobble. The cleaner side is Nvidia, Microsoft, and Broadcom if pricing power and infrastructure orders remain credible. Pressure sits with weaker AI labels, highly levered data center financing, and banks exposed to crowded AI credit structures. For private investors, the useful filter is whether Nvidia's strength is confirmed by credit-sensitive AI infrastructure rather than by one stock alone. Second, the macro hedge trade is back in focus. CNBC called the return of the debasement trade after the Debasement bond maneuver, with crypto and gold back in style. MarketWatch highlighted Bitcoin above $80,000 and oil slipping even as Iran-related pressure stays in the background. In plain English, investors are hedging policy, debt, and dollar credibility while still refusing to price a full oil shock. Potential beneficiaries sit with gold miners, Bitcoin-linked equities, and quality hard asset exposure if real rate and dollar worries continue. Pressure sits with long-duration bonds and dollar-sensitive growth if the hedge move comes with higher yields rather than easier financial conditions. The private investor takeaway is not to chase every hedge headline. Check whether gold, Bitcoin, and TLT are telling the same story or three different stories. Third, the consumer tape is not one economy. CNBC reported that Dick's Sporting Goods missed revenue expectations and cited a challenging footwear market, while United Airlines added international routes for 2027 from Sardinia to Okinawa. That split matters because it says the U.S. consumer may be cutting back in some discretionary categories, while premium and experiential travel still clears pricing. The cleaner side is companies with international premium demand and pricing discipline. Pressure sits with sports retail, footwear suppliers, and lower-end discretionary baskets if inventory or traffic weakens. For private investors, the practical takeaway is to separate travel strength from general consumer strength. They are not the same signal. Fourth, the hidden mechanism is AI governance moving from politics into market plumbing. CNBC reported that OpenAI banned Russian ChatGPT accounts used in a covert misinformation campaign, while BlackBerry said robotics is one of its fastest-growing businesses. This matters because the next AI winners may not only be model owners. Security, verification, embedded software, and physical AI controls become part of the investable infrastructure. The cleaner side is cybersecurity, trusted AI infrastructure, and embedded robotics software. Pressure sits with platforms that scale AI without trust, provenance, or compliance controls. The private investor filter is to watch whether AI spending broadens from chips into security and operational control. Here is the stock-led watch list. First, Nvidia, Broadcom, and Microsoft for AI pricing and infrastructure proof. Second, TLT, gold miners, and Coinbase for the debt, dollar, and hedge channel. Third, Dick's, Nike, and United Airlines for the consumer split. Fourth, OpenAI's ecosystem, BlackBerry, and cybersecurity ETFs for the trust and control layer. Market bias, cautiously constructive only if AI leadership is confirmed by funding conditions and breadth. If Nvidia leads alone while credit stress, gold, and Bitcoin all flash policy anxiety, this becomes a narrower and more fragile tape. The mistake to avoid is treating AI, debasement hedges, and consumer data as separate headlines. Today, they all test the same question. How much risk is Wall Street willing to finance behind the market's favorite growth story? That is the U.S. pre-market brief for Tuesday, 25th August. Watch Nvidia, TLT, gold, Bitcoin proxies, and the consumer split before calling this a broad risk-on day. Research context only. This briefing is not investment advice, not a trading recommendation, and not personal financial guidance. No targets, stops, sizing, or portfolio instructions are provided.